Hi everyone, good morning and welcome to today's morning report on Monday the 29th of September with me, Rich Perry, market analyst at Hantech Markets. These European financial markets have started on the back foot really. There was a slight amount of support early on which followed on from a strong close on Wall Street on Friday, but just since the open certainly the equity indices have just dropped away. There's no significant reason behind it, although there are metals prices that are declining, which obviously will have an impact on some heavy weighting mining sectors. So that could be one of the reasons behind it, but no excessive reason that I can see so far. In terms of your currency markets, you've still got this the dollar hanging on to the strength that it's seen over the past few weeks, still climbing, basically flat against the euro, but all pretty much across the board. It's gaining against everything else. Certainly, the yen is weaker once again, and the two commodity currencies, the Aussie and the Kiwi dollars, are significantly lower against the dollar once again. So interesting moves there that we've seen today. In terms of our data that we're looking out for today, you've got the German CPI data, the flash data that comes out throughout the morning, but culminates in the countrywide number at 1 o'clock this afternoon. The initial regional CPI data seems to be fairly supportive of inflation at the moment, mostly in line. A couple of regions have come in ahead of expectations, so it would assume that the composite German data at 1 o'clock will come in around about that 0.8%, which is forecast by the market. So that could show signs of stabilising inflation in Germany. Also, we've got the US home sales, US pending home sales this afternoon, 3 o'clock. Depending on which estimates you go by, Reuters is calling for a correction or a little bit of a decline by 0.1% lower. Others are calling for a slightly larger correction to the downside, but certainly on the back of that incredibly strong new home sales data, the markets will be very interested to see how the pending home sales come out, and that's at 3 o'clock this afternoon. So that takes me on to my chart of the day, which is the dollar CAD. The Canadian dollar. I said earlier that the Kiwi and Aussie dollars have been hit fairly significantly this morning. The CAD's not too bad at the moment, only slightly dollar positive on that chart, but certainly there is still this move higher on the dollar CAD, and I think that breakout above 111 seems to be the key move near term. Having already broken out above that 1.1 level, I think the latest break above 1.11 is the key move near term. You've got this strong move on the momentum indicators, they're all very positive, but I just think that this coming, and what we could be seeing today is the beginning of maybe a little bit of a slight correction that would unwind the RSI, give you a great buying opportunity if you got back between, say, on this intraday hourly chart. You can see that there is a band of support here on this chart around about that 1120 level down towards 110.80, so sort of 40 pips worth of support there, a very decent area to possibly look for a buying opportunity. But certainly the CAD dollar CAD looks strong, which ultimately is CAD weakness, but dollar CAD looks very positive from further upside, I think, towards this key March 2014 high of 1278. But it looks further. Looks as though it will see further gains. Momentum indicators strong across the board. Just maybe you could be waiting for a slight dip to the downside to give you that nice little buying opportunity. Anyway, I wish you good luck in your trading today on dollar CAD, and I will speak to you later. Thank you.